Good morning, everybody. There's a lot going on out there, so let's get to it. We've been talking about AI, but not AI in general. It is going to change the world. We know that. The business side of AI. And so we talked about the round tripping that's been going on, where one company gives 100 billion to another company, and the other company just buys 100 billion from the company that gave them the money in the first place, and how that looks very much like .com quarter of a century ago. We've also talked about these data centers and how much they cost. We're going to put 400 billion into data centers this year, and the electrical usage, the water usage, but the money usage. Wait a minute, 400 billion, but revenues this year are 20 billion? How are these going to pay for themselves when they will be obsolete in 3 to 5 years because the technology is leaping ahead so fast? This isn't penciling out right now. And so now the other part of this is, does this marry up with other things we've seen throughout history? Well, the obvious one, of course, is .com. .com changed the world, just like AI is changing the world. But where were they sinking their costs quarter of a century ago? Fiber optic cable. And here was the thinking: whoever could lay the fiber optic the fastest, well, they would then get the customers, and the customers would be sticky and they would stick with them forever. And at the time, you know who we thought was going to win? AOL. And everyone thought that. They were the first in the space. Everybody had AOL accounts and they didn't keep up. And of course, we all know what happened with AOL. So can Walt and I predict right now what AI companies are going to win? No. Can we predict that a lot of those companies that are doing it now will go out of business? Yes, that's probably likely to happen. But AI will still change the world. You know where else this happened? We've got to go back over 150 years more. The railroads. This looks so similar to the railroads and what happened way back then. What we wanted to do was do the transcontinental railroad from the East Coast to the West Coast. What an amazing thing we could do. And we did it. Did the companies make any money? Actually, no. The guys at the top did, they always do. But the investors who bought into the story, and it was a great story and it did change the world. We're going to go from east and we're going to move cargo back and forth and all the money that's going to be made. And all kinds of companies went into this business laying railroad track. The costs were out of this world, just like with AI data centers, but there wasn't enough cargo. There wasn't enough money to be made. So what did back then, they didn't really have Wall Street the way we have it now, but what did the financiers do? They sold the story and the crowds bought into it like crazy because everyone wants to believe the story, and they executed on it, but it never made money. In the history of the railroads, they would boom and bust, boom and bust. And again, the guys at the top, the finance guys made money, the rich guys in the railroad companies make money, but everybody underneath lost. It's so similar to today. So the next question is a pretty logical one. Well, all right, Greg, you and Walt aren't doing any of this stuff, so why are you telling us about it? All right, what's going to happen here when the AI bubble bursts? What's going to happen to the stock market that has been held up by these AI companies for the past couple of years? I'm going to guess everything is going to go down and go down pretty hard, including some of the stuff we're in. Well, Greg, why don't you get us out? Let's talk about this. First, why will our stuff go down if we're not in AI? A lot of this has to do with something called margin calls. Margin. People can borrow money to buy stocks. Now, back in the old days, you could put in $1 and buy $10 worth of stock. They don't let you do that now, but you can still borrow money. And right now, margin amounts are in excess of $1 trillion. That means American investors out there borrowed $1 trillion to go buy mostly AI stocks, thinking this thing's going to go up forever. As stocks go down, what happens is those guys get something called margin calls. Hey, Fred, you borrowed all this money, but your ratio is off now. You got to come up with some cash. That means Fred's got to sell everything. Even things he doesn't want to sell, he has to sell. When did we see this last in our accounts? COVID. The market dropped 50%. Our accounts initially fell less than half of that, but they still fell. And we recovered much faster. Do I suspect that this is probably going to play out again? The question is when? And again, this goes back to that Paul Tudor Jones quote. Is this 1999 when .com doubled from 99 to 2000? Is that going to happen with AI? Or is this the year 2000 when the whole thing's just about to roll over? I don't know, and Walt doesn't know. But I am pretty confident of what the reaction will be of when, after it busts, the government is going to get involved. The government is going to say, we cannot allow all these pension funds. We can't allow Wall Street to crash. We can't allow, this is a national security asset. Right, well, we'll never do that. Actually, the system's already in place. After the crash in 1987, Ronald Reagan formed something called the Exchange Stabilization Fund, and it allows the government to intervene in the markets. And has the government done it before, kind of quietly? Yes. Do we call it the Exchange Stabilization Fund in our industry? No. We call it the Plunge Protection Team. And when things start to fall apart, the Plunge Protection Team enters in either via the Treasury, usually it's the Treasury, or even probably the Federal Reserve, and they start to buy stock to bring everything back up. Okay, I guess you can do that, kind of artificial. And will we do it? And have we done it? Yes, yes, yes. And will it lead to more inflation? Yes, which is when our stuff really goes up. So here's what we could do. We could try to time it, right? Let's get you out now, try to buy back in, and then have it go back up. Here's the problem with this. Sometimes they close markets, which is exactly what we saw in 1987. We also saw it after 9/11. And so let's say we get you out and then we want to get you back in when and the markets are closed. And then the markets reopen and we're too late. We're just not very good at that stuff. So the warning to you all, when AI goes down, we're not going to be cheering it on. Will we go down partly with it? Probably. Will our recovery be faster and higher? That has certainly been the history here so far. So with that, that's why I covered the AI piece of this thing. It does connect to us, but I suspect long-term, it will be a very positive connection for all of us who are invested in the hard assets at this time. So with that, I'll turn it over to Walt.